So far we learned two stages. The first stage is if the errors are identified before preparing the trial balance, how to rectify them. The second stage, if the errors are identified after preparing trial balance and before preparing the final accounts, how to rectify them. These are the two stages we learned so far. Now we are left with the third one. What is the third stage? The third stage is if the errors are identified after preparing trial balance and final accounts. What do you mean by final accounts? Preparing profit and loss account and balance sheet. So if the errors are identified after preparing trial balance and final accounts, how to rectify them? What are the things we need to keep in mind while rectifying those entries? Right? So we are going to learn about the third stage today. Are you ready for that? Hi, my name is Krishna Akumalla. Welcome back to my YouTube channel. We are going to concentrate a lot on the third stage because it is very important, guys. Because by the time the trial balance and final accounts are already done, that means, and the errors are not identified, that means how those errors are, supposed to be treated in next year. Because if final accounts are prepared, trial balance is also prepared, final accounts is also prepared, and still the errors are not identified and still the errors are not rectified, then those errors are obviously will be carried forward to next year, next accounting period. Obviously, they will be carried forward to next accounting period. If they are carried forward to next accounting period, how do we rectify them? That is what we are going to learn in this video. Without wasting much time, let us get into the presentation. Okay, guys. Where are we? We are going to learn the third stage. What is third stage? Errors identified after preparing trial balance and final accounts. This is where we are going to learn today. Errors identified after preparing trial balance and final accounts. Few important points we need to keep in mind here. If you look at the stage 1, what stage 1 says? Errors identified before preparing the trial balance. So we are yet to prepare the trial balance. We identified the errors. We can rectify it in the same accounting year because books are not closed. That is the underlying point. Books are not closed. Krishna, how can you say that books are not closed? Because trial balance is yet to be prepared. Final accounts are yet to be prepared. So books are not closed. When the books will be closed, once you prepare the profit and loss account and balance sheet, then only the books will be closed. As soon as the profit and loss account and balance sheet is prepared and completed, you are going to close your books. Close your books in the sense what? For that period, since we already prepared profit and loss account and balance sheet, we should not post any entries in the previous year. I'm repeating again. If the books are, what do you mean by books close? Very important. What do you mean by books close? Here, books close means you have already prepared a trial balance. You have already prepared a profit and loss account. You have already prepared your balance sheet. You understood what is your profitability. You understood what is your financial status by preparing these financial statements. Once that is done, you need to freeze your books for the previous year. Why you need to freeze the books? Freeze in the sense you should not allow anybody to post entries into the previous year. For example, 2022 January 1st to December 1st is the accounting year I'm following. Okay, for 1 year. This 1 year completed. I prepared my trial balance and I also prepared my final accounts by February month end. I'm just taking an example, February month end. I prepared my final accounts, everything is completed. Then I should not allow any of the accountants to post entries during this period. You should not do backdate and post any entries between January 1st to December 31st, 2022 because that year is closed. The profit and loss account and balance sheet is prepared. You arrived a profit. Your books are closed. So you are not supposed to go back and make any entries in that particular period. Getting my point? So stage one, what did we understand in stage one? Stage one, you have not even prepared the trial balance. You identified the errors. You rectified it because books are not closed. So no problem. Go to stage two. Stage two, what happened? Trial balance is prepared, but final accounts are not prepared. Then you identified the error. In between, you identified the error. What do you mean by in between there? After preparing the trial balance and before preparing the final accounts, you identified the error. Then no problem because you have not completed your final accounts. So your books are still open. You still can go ahead and post the entries in your year. So no issues. Now we are in third stage. Third stage says errors are identified after preparing trial balance, after preparing final accounts. That means what? By the time final accounts are prepared and completed, your books would have been closed. So since your books are closed, you cannot go back and post any rectification entries in the previous year. You cannot go ahead and post any rectification entries in previous year. But unfortunately, what happened? You identified some errors pertaining to the previous year after preparing final accounts. What happened? You identified some of the errors after preparing the trial balance and final accounts. You identified it. Now you are saying you cannot go back and rectify. If you cannot go ahead and rectify them, then how to rectify them? You can rectify them in next year only. You can rectify them in next year. Now, how to rectify them? How to rectify them in next year? That is what we are going to learn now. Most importantly, let us say you already prepared the trial balance. Trial balance is done. Profit and loss account is also prepared. Balance sheet is also prepared. So all financial statements are completed. Trial balance is completed. But still there are some errors. So those errors would have been there in trial balance because if the errors are there in previous year, how trial balance would have been tallied? Question yourself. How trial balance would have been closed? Would have been tallied? It wouldn't have been tallied because there are some errors. You can say, Krishna, they are all compensating errors, so there is no. Yeah, if there are no, if they are all compensating errors, you are absolutely right. You will not find them, find any difference in the trial balance. But if there are one-side errors, you would have definitely posted them to suspense account. So your trial balance would be showing a suspense account balance. But your trial balance is tallied because the difference has been posted to suspense account, right? Since the difference is posted to suspense account, your trial balance would have been tallied. Then you started preparing profit and loss account. Then you started preparing your balance sheet. Yeah, it works out. Why? Because the difference has been posted to suspense account. The balance is still lying in suspense account because you did not identify those errors. When you are supposed to identify those errors would have been identified before for preparing the final accounts. You did not identify them. Since you did not identify them, the difference would have been there in the suspense account. With that suspense account, you would have prepared profit and loss account and balance sheet. That is the assumption you need to take in stage 3. What is the assumption you are supposed to take? There is a difference in trial balance. If at all there are one-sided mistakes, those errors wouldn't have been identified, right? So the difference in trial balance would have been posted to suspense account, but that suspense account is still carry forwarded. You prepared your profit and loss account, you prepared your balance sheet with that suspense account balance only. The reason is, did not identify what is the reason for that suspense account balance. You did not identify what are those errors causing the difference in trial balance, because of which your suspense account is still lying in trial balance. With that difference, you prepared your profit and loss account and balance sheet. Now, next year, you are in next year now. Next year, what happens? The suspense account is still lying there. You need to rectify it. Right? Trial balance suspense account is still there. You need to rectify it. Then you started identifying why that suspense account balance is there in that. How do I rectify? Right? Now, so what is your conclusion here? If at all any errors are identified after preparing trial balance and preparing final accounts, the difference would have been there in the suspense account, and the suspense account balance was not resolved in the previous year. That has been carried forward to next year. That is the assumption you need to take here. Are you clear? Right. Next, another important point what you need to keep in mind here is, yeah, trial balance has suspense account. So this suspense account is carry forwarded. Now, you have completed 2022 January 1st to December 31st year got closed. January 1st to December 31st year got closed. You prepared trial balance, you prepared balance sheet, and there was a difference. The difference was posted to suspense account. That suspense account balance has some amount. With that amount, you prepared your profit and loss account and balance sheet as well. Are you clear so far? Now you are in 2023. Now you are in 2023. So that suspense account balance will be carried forward to 2023 now. That suspense account balance will be carried forward to 2023. What you are supposed to do, you need to identify the suspense account, why there is a balance, what are the errors, against which the suspense account has the balance, that you need to identify. But when you identify them, those items will be called as prior period items. Period items. Why we are calling it as prior period items? They are pertaining to previous year. They are pertaining to previous year. They have not identified in previous year. They have been carried forwarded to next year. In current year, when I say next year, 2023, the suspense account balance is there. You started identifying the errors. Those errors are pertaining to 2022. Those errors are pertaining to 2022. Since they are pertaining to 2022, they will be treated as prior period items in 2023. They will be treated as prior period items in 2023. So, when we identify these prior period items, wherever you see one-sided entries are being posted, especially in nominal accounts, those differences have to be posted to a separate account called P&L adjustment account. P&L adjustment account. You should not use straightaway P&L account for adjusting prior period items. Why? Because if I adjust any previous year related expenditure in current year, what will happen? My profit will be understated. Simple example, I'll tell you. Let us say purchases. Purchases, 1 lakh worth of purchases were short totaled in 2022. Short totaled 2022. 1 lakh worth of purchases were short totaled. That means your purchase account would have been understated in 2022. To the extent of 1 lakh, your expenditure would have been understated, shown a lesser value. Since 1 lakh amount of purchases have been shown lesser value in P&L account, your profit would have been overstated in last year. Your profit would have been overstated. When I say overstated, profit would have been increased to that extent because 1 lakh worth of purchases you have not debited in your P&L account. Since that is not debited in your P&L account, to that extent your expenditure is reduced, shown less. If the expenditure is less, automatically income will go up. If the income goes up, what will happen? Your profit will increase. That means what? You are overstating your profit in previous year. Am I right or wrong? So previous year is got closed. Now you are in 2023. So what will happen if you need to bring this 1 lakh into 2023 P&L account? 2023 P&L account, you need to debit this 1 lakh. If you debit this in this 1 lakh in 2023 P&L, what will happen? Your 2023 profits will show lesser figure. Why? Because the expenditure is increased. This is not pertaining to 2023. This is pertaining to 2022. But you are showing it in 2023. If you start showing this in 2023, your profit and loss account will not give the right picture. Why? Because you are bringing some 2022 values here and debiting in P&L account, because of which your profit is going down. Your profit is going down. So that means what? Because of this prior period item, which was missed out in 2022, being carried forward to 2023, and if this is debited in current year 2023 P&L account, your profits will come down. That means your profit and loss account will not give the right picture because it shows a lesser profit, which is not correct, because that 1 lakh is not pertaining to 23. That is the reason what accounting standard says is, was whenever you have a prior period items, you should not debit to P&L account straight away in 2023. Should not debit to 2023 P&L account. What you are supposed to do is, you need to do the adjustments in profit and loss account adjustment. Profit and loss adjustment account. You need to create a separate account called profit and loss adjustment account, and this 1 lakh has to be debited in this account. And whatever profit you received in 2023, that will go to profit and loss adjustment account. From there, this 1 lakh will be reduced and it will show the net profit. Now, what way it differs? Yes, it differs. The reason is, if I look at 2023 profit and loss account, I will get to know what is the actual profit for 2023. But when I go to profit and loss account, I will get to know, oh, 2023, though I have a good profit, since there are some prior period items, those adjustments have been done in P&L adjustment account, because of which 2023 profit has come down, or 2023 profit has been increased. Depends on the situation, depends on the type of expenses or revenues are being affected. So 2023 profit and loss account adjustment, profit and loss adjustment account, if I look at, I will get to know, oh, 2023 profit has been transferred to profit and loss adjustment account. From there, some adjustments of prior period transactions have been done and they arrived at net profit. That means there are some mistakes happened in 2022. Those mistakes have been rectified in 2023. You will come to that conclusion by looking at the profit and loss adjustment account, by looking at your profit and loss adjustment account. That is the reason why what accounting standard says is, in 2023, when you are preparing the profit and loss account, you should not show these prior period items in 2023 P&L account. They have to be adjusted in P&L adjustment account. You need to prepare a separate account called P&L adjustment account, and you need to post them into P&L adjustment. This is one reason. The other reason is, whenever you have profit and loss prior period items being carried forward to the current year, what will happen? You need to see the material impact of those expenses and incomes. What do you mean by material impact? Whether they are small mistakes with a smaller impact on P&L, or it has a bigger impact on the P&L account. That is what you need to see. Whether it has a small impact on the profit and loss account or big impact on the profit and loss account. That can be assessed, or that can be called as material impact. What extent this error has an impact on 2023 profit and loss account, that is called materiality of the error. That is called materiality of the error. Materiality of the error is nothing but identifying whether that error which is identified in 2022 has a major impact in my current year profit and loss account, or it has a minor impact of my profit and loss account, has to be decided. That is the reason. How do I decide? How do I identify them? If you go to P&L adjustment account, you will get to see, oh, these are the prior period items got adjusted in P&L adjustment account. Let me see whether all these expenses and losses, incomes and gains being adjusted in P&L account, P&L adjustment account has any material impact or not. If there is any material impact, that has to be disclosed separately in 2023 profit and loss account and balance sheet. That is the reason why prior period items have to be adjusted in profit and loss adjustment account separately. Are you clear? So here suspense account is there. That suspense account you are going to rectify now. How do you rectify suspense account? You need to either debit to P&L account or credit to P&L account to nullify the suspense account balance. While explaining the problem, you will get more clarity how to adjust the suspense account between suspense account and profit and loss adjustment account. That I am going to get a super clarity to you while explaining the problem. But right now what you need to understand is there is a balance in suspense account. Carry forward to the current year. How do I rectify that suspense account? You need to rectify it by either debiting or crediting to profit and loss adjustment account. Why profit and loss adjustment account? Because these items are related to prior period. That means previous period. Since they are pertaining to the previous period, I cannot straight away go ahead and adjust in the 2023 P&L account. That is the reason why I am making those adjustments in profit and loss adjustment account. After doing adjustments in profit and loss adjustment account, what I am supposed to do, I am supposed to check what is the materiality of those errors or those mistakes I need to check. If the materiality is high and I need to disclose them in my annual report of 2023 saying these are the mistakes happened in 2022 or prior to that, and these errors have been considered as material impact, and I'm disclosing that as a separately in my annual report under maybe profit and loss account and balance sheet. You need to disclose it. That is the reason why this is very important. Third stage is very important. Are you clear so far? Let me conclude that. I am not going to explain any illustration in this video. Next video I will cover the illustration because this concept is very important. This concept is very important. Once again, let me explain with a brief explanation. Previous year, whatever difference identified in trial balance would have been posted to suspense account. That suspense account will be carried forward to next year. The reason for carrying forward to next year is we did not identify the errors before preparing the final accounts and trial balance. So the suspense account is carried forward to next year. Clear? Number one. Number two. Now these errors are identified in next year. When they are identified in next year, you cannot adjust them straight away P&L account of 2023 because they are prior period items. Since they are prior period items, the adjustments have to be done to a separate account called P&L adjustment account. So we have to create a P&L adjustment account. Why P&L adjustment account is created? Because P&L adjustment account, if I put all these adjustments, I will get to see whether all these errors posted to P&L adjustment account has material impact or not. We can check. Once we confirm that it doesn't have material impact, you don't require to disclose. If it has a material impact, you have to disclose them in our annual report. That is the reason why this is an important concept which you need. Are you clear? If you like the content, please like the video, subscribe to my channel, and share this video with your friends and colleagues. Thank you so much.